One of the main questions that I always get asked is, can a synthetic covered call strategy outperform the actual underlying that is trying to replicate? And the answer is yes, it can, if it goes down slightly or moves up slightly, but under the covered call strike. So if you look at Tesla in the last 5 days, and the market is currently open, it is Friday, 2nd of February. We've got a few hours to go to the market close, but you can see here it's down roughly 1% in the last 5 days. And if you look at TSLY, TSLY is actually up 0.4% in the last 5 days. So my covered call ETF is also up this week. And if we have a look at how it's looking at the moment, so the unrealized loss that I've got on the account at the moment of my 182.50 synthetic is $116. And if we have a look at what I realized in terms of covered call premium for the week, it was $240. So that nets out at $124. So if we take that 124, just so we can see what that looks like over the 24,000 and put that as a percentage, again, it's around 0.5%. And compare that to TSLY, it's 0.4%. So my TSLY synthetic covered call ETF is outperforming TSLY, and it has been outperforming TSLY since we started this overall experiment. So that is how you can get a positive gain in a covered call ETF versus the Tesla underlying price appreciation for a set time period. So what we're going to do for the rest of this video is go through how much money I made, all these kind of good things. And then we'll go look at the charts where, again, you can see here, this is why I use pivot points of how the Tesla's price went to that pivot point and then went down. So I could have made a lot more money than the 240 that I actually made. And this just shows why that at some point you have to be watching the stock and, you know, all these other different things in there. So we'll go through all of this and hope you enjoy it. Smash the like button. Don't forget to subscribe, all these kind of good things. So we start with the covered call as we always do. We had the 187.50 covered call ETF expiring today. Market is still open on February the 2nd. You can see that Tesla's trading at $183.51. So you can see here, for me to buy this option back of the 266 that we sold, it cost me $24 to buy that back. So we made around 90% of the total premium. And I could have waited and done this later on in the day, but I wanted to kind of get this video out and, you know, kind of showcase you an example of while the market is live and while the market is open. So what we decided to do is buy this back just recently, and then we sold the exact same strike. So the 187.50 pushed out to February the 9th, which is next Friday. So net, that kind of works out as a total credit, well, if you do it including commissions, is 242. So we netted last week that on the 260, 265, we netted a realize of 240. So this number there was 265, so slightly less, $24 left. And again, that's now been paid and added to the dividend number. Now, what we have here is the 267, which is what I sold. That is what we're estimated for this week, which is 1.09% of the total count, which is the estimated figure. So as you can see, our total dividends is $2,451. And again, like I've always mentioned, without dividends, with dividends reinvested, that is a minus 19% from when we started on the 22nd of December. And then without dividends, so I have been withdrawing out the dividend, I'm 25% down in the portfolio. And I love using this start, this is when I started. I had a good first week, and then it just went terribly all the way back round. So we'll go into all of that, but that's kind of what the lay of the land is. And as we can see, you know, we're up 0.5% for the week, which again, considering some of the weeks that we've been having of, you know, minus 2 grand, minus 3.6K, etc., I'm happy to have a flat week. In terms of the synthetic, we didn't need to reposition, right? Because we've got the 182.50 and the Tesla's trading at 183.61. So there is no need for me to reestablish this position. I've got this till February the 16th. We're only down by $1 move. So my view is we don't really need to do anything, and therefore we can still capture a decent amount of premium if the price goes to 187.50. So if we have a look at the actual chart, again, my challenge with this is obviously I'm doing other things as well, so I'm not always watching the chart and what's going on with Tesla. And you can see here, price went right back to the pivot level, used it as resistance, and dropped all the way back down again on the 1 hour chart, which is what we expected to happen. Same thing happened last week, the week before, and then went down, right? So it went to a high, if I look at this, it went to a high of 196.35, which you can see here. If I do I forgot what it was. Let's have a look here. Well, all we really needed to know, if it was 195, let's say, so that minus 182.50 is, it was up by $12. That would have been 1,000 on there, but again, I've capped myself at 187.50. That's probably what I should do, 187.5. But I could have taken off the table and made a $5 gain in this situation where I could have made a 1.2k, but because I'm capping my upside over here, then I would have walked away with around $5. So instead of showing 240 here, I would have shown $5 there. But again, it's fine. We are where we are with it. What I do like about this current setup, as I'll show you for those who are interested in divergence plays, we'll see that, we're pretty much going to remain flat here. And you can see that the RSI is making a move in the upward direction. Again, that is bullish divergence here, where you expect to see either some pivot out or that type of move, right? So we've got a hit pivot here, missed pivot here, hits here, and another miss here. So we've got two pivots that, again, I don't think I'll get to 260 for a while. But what you can see here is that we're starting to hopefully see that kind of bottoming out momentum to a certain extent here, which is kind of what we need to really get going. It could again continue going down, like it can do it on this hour chart, but these are the types of things that we look at from a technical perspective and how we manage the situation when things are not necessarily going in the right frame of mind. So I've not created the weekly pivot for this week because the market is still open, but my assumption would be it'd be somewhere around this area over here somewhere. So again, I've gone for the 182. What's my strike in? A 187.50, which again is still around here. So we're not asking for a big move here, right? It doesn't need to be a massive move for it to get to these levels. But again, this is why I like to use pivots, and this helps me select my strike selection, all these good things that I've been talking about. So, hopefully we can get some areas of consolidation and just, we can put our covered call just slightly above, trying to get an extra $200-300 a week now. And hopefully this is just the calmness of the next few weeks of the overall market conditions for Tesla. So again, like I said, I'm quite happy with where things are. Yes, I could have made $5 instead of $500, $240, but I'm not complaining, right? The price is up now again, a little bit over here, so minus $64 in terms of the unrealized. So I'm quite happy with that. Netted 267 for this week, and I'm going to continue chip away at this, right? Like I said, I'm making money every single week. Yes, this number is at minus 25%. But overall, I think if we can get some good weeks or momentum going up, we can start crawling some of this 25% back as well. So again, I really hope you've enjoyed this video. Make sure you like and subscribe. If you've got any questions, please let me know, and I shall see you guys in the next video.